you remember before when what I'm showing you here is a wedge formation, but you remember before when everybody was complaining because spot gold was hitting its head, not really doing anything? Oh yeah, it's doing quite a bit. But remember, in a wedge formation, that is a series of lower and lower highs and higher lows. When you see that, at some point, it will either break out above, which is exactly what you're looking at here, or break down below. I believe that you will definitely see spot silver going ahead and breaking out above that range. And it's certainly possible that, because it's close enough, 39, 38, 39 bucks. We're going to see the 40 buck. Easily, we could see it maybe to that 50 range before the end of the year or the beginning of the year. In 1971, we'd lost enough purchasing power that, I'm going to take these off. That same dollar now just bought you 6 loaves of bread. But they knew this because, can we have that up, please? This is what they knew many things, but by a continuing process of inflation, governments can confiscate secretly and unobserved an important part of the wealth of their citizens. And while the process impoverishes most people, it actually enriches some. And we've seen the wealth and income inequality. But I'm going to show it to you in terms of bread, because I tell you this all the time. There are over 4,800 government debt-based currencies that no longer exist. And this is all that's where we're headed, but it's all by design. Inflation is baked into the system so that governments can tax you without having to go through legislation, but corporations can pay you less. So I know we're seeing a lot of the overlap between government and corporations now, but that's always been the way that it was since the very beginning. And this time, my friends, is not any difference. So just understand that inflation is baked into the system, and this was the beginning of the system, and we are now at the end of it. And let me show you further.
Inflation isn't just an economic mishap, it's engineered. Governments prefer it because it diminishes debt in real terms, while citizens unknowingly pay the price. Corporations also benefit, paying wages in weaker money while maintaining profits. Together, governments and corporations operate in lockstep, ensuring the public shoulders the burden. Every new dollar created reduces the value of those already in circulation. This cycle has repeated across civilizations, always ending in currency collapse. The U.S. is no exception. What we are experiencing now is the endgame of a system deliberately designed to confiscate wealth through silent devaluation.
Because as I showed you before, just to make the point, that whether it was a 20th of an ounce of gold, a $1 gold piece, 1 ounce of silver, or 1 silver certificate, they all bought 11 loaves of bread. Now, that is no longer true. Right now, let's just see how much. It's 0.4. It's not even a half of a loaf. It's pretty much like this one we won't donate. But, okay, what can this $1 buy you now? This much bread. That's how much it can buy you. Crappy deal. How about that silver? How about it? Well, let's see. How about 16 loaves of bread? So we can put more on here. I'm doing this visually because I really want to make this point. And this is a pretty dramatic way to do it. That's 7, 8, 9. I couldn't even buy as much bread as I wanted. Let's see, we've got 2, 4, 6, 8, 10, 12. 15 and 16. That's 16 loaves of bread. So that silver dollar can still buy you the same amount of food. That's why I like silver for barterability. But how about this little 20th of an ounce, this $1 gold coin? Well, quite honestly, they didn't have enough. But that $1 gold coin, here, I'm not even taking it out of the bag. All I could do was get 45 loaves.
Sometimes numbers feel abstract, so let's translate inflation into bread. In the past, a silver dollar or a small gold coin could buy multiple loaves. Today, that same silver dollar still buys about 16 loaves, and a $1 gold coin can buy as many as 45. But a paper dollar? Barely half a loaf. This visual comparison exposes the truth. While fiat currency crumbles, precious metals maintain purchasing power across generations. Even in times of crisis, silver and gold provide a consistent standard of value. Bread becomes more expensive, but metals retain their strength as money.
And by the way, this is the cheapest bread that I could find. $2.49 on sale at Safeway. Not going to be able to see me in a minute. Crazy, right? Do you see what I'm saying? Because you can't even see me anymore, can ya? Well, I'm about to be buried under bread. But let me tell you, all I was able to get were 45 loaves, and this is not on this table. But the $1 gold coin, that not only maintains your ability to purchase the same goods and services, but it expands it. So, did I make my point? Now I want to show you what's happening in the spot markets. There's nothing below there, right? All right, I'm just going to push them off. Okay. Okay. So there's some interesting things that are also happening in the spot gold and silver markets. So let's take a look at what that looks like. This is the spot gold chart. Yep. And you remember before when what I'm showing you here is a wedge formation, but you remember before when everybody was complaining because spot gold was hitting its head, not really doing anything? Oh yeah, it's doing quite a bit. But remember, in a wedge formation, that is a series of lower and lower highs and higher lows. When you see that, at some point, it will either break out above, which is exactly what you're looking at here, or break down below.
Turning to modern markets, gold and silver charts reveal telling patterns. Spot gold has formed a wedge pattern, with prices pushing against resistance near $3,500. This kind of technical setup often precedes major breakouts. Despite temporary pullbacks, gold is forming higher lows, signaling strength. Silver shows similar behavior, hovering near the $40 mark, with potential to surge past $50 in the near term. Historical chart formations like double cups suggest long-term momentum is building. These are not random fluctuations. They are the market's way of signaling growing stress within the global monetary system.
Which is not what you're going to see here, because the markets are much hotter. You will also notice on there the red line, which is the 200-day moving average, and the blue line, which is the 50-day moving average. So on the 200-day moving average, every day for 200 days, they total up where spot closes and they divide it by 200, and that gives you an average. And it kind of acts like a rudder on a ski boat. And if the spot price is a water skier, there's only so far above or below that it can go before coming back to that center. So I point this out because I want you to look at what's happening with the spot market right now. It keeps going up to about 3,500 and bumping its head because it is so far away from that 200-day moving average. 10% technically would be considered a lot. And so where you see it keep going up and bumping its head and going inside of this narrow range, what it's actually doing is working off that overbought position. But what you're also looking at in this chart is higher and higher lows. So my anticipation is we could have a little bit more inside of that trading range between the top and that line on the bottom, but we are going to get another breakout, and you will most likely see spot gold go well above 3,500. And that range is getting more and more narrow, so I can't tell you exactly when it's going to break out because I cannot really tell that. If it were like in the tip of the wedge, right, where it goes like that, if it were in the tip, that's kind of easier to tell. It's got a little bit to go, but expect a breakout and expect spot gold to continue to rise. That's what I'm seeing here. Now, how about spot silver? Well, spot silver, we see actually a wedge formation starting where, like we saw with spot gold in the previous chart, you have a small series of lower highs, but you also have higher lows. So that can go inside of this range for a little bit too. We're not at the end, we're not at the very tip, but
recent price comparisons illustrate the severity of currency decay. A single gold coin, once worth $1, now commands enough purchasing power to buy well over 100 loaves of bread. Meanwhile, $112 in paper money barely covers a family's grocery needs. This isn't just about bread, it's about the cost of survival. Housing, healthcare, and education have soared as wages lag. Precious metals act as financial lifeboats in this sea of inflation. They don't just preserve value, they often expand it. Ignoring this reality leaves individuals vulnerable to the ongoing confiscation of wealth.
I believe that you will definitely see spot silver going ahead and breaking out above that range. And it's certainly possible that, because it's close enough, 39, 38, 39 bucks. We're going to see the 40 bucks. Easily, we could see it maybe to that 50 range before the end of the year or the beginning of the year. But it is now working all of that off. And my bet is, well, I know, once it goes above the 50, technically, we will have a breakout. And I've shown you this before. I didn't show you this on this chart, but I've shown you this before where we're really looking at a double cup formation, which is really quite, I haven't seen it in any other chart. It's quite rare, quite powerful, and on its way. So can you see, I kept the receipt from yesterday. 45 loaves cost me $112.05. Or it cost me $1 worth of this dollar gold coin for 186 loaves. Goodness gracious, there is very hard evidence, and it's going to get worse and worse and worse. And that's using, how many of you spend $2.49 on a loaf of bread? Right? So now I will take questions, and I want comments, and I want thoughts, and let's start this conversation. Before we do begin, that I will be going to Malaysia. We are leaving on the 12th of September, but Emerald will be here doing the lives because the timing just kind of made it very challenging. But the lives are so important to me, and I will be back doing the live, whatever that day is after October 1st, because that's when we're coming back.
History proves that no fiat currency survives. Canada, for example, has not officially confiscated gold in the past, yet its government recently froze bank accounts during protests, reminding citizens how fragile financial freedom can be. Older gold and silver coins remain one of the safest hedges, offering both privacy and enduring value. Whether through U.S. pre-1933 coins or historic Canadian issues, physical metals give individuals protection that paper promises cannot. As governments and banks tighten control, gold and silver remain the assets that stand outside their reach, true stores of wealth in an uncertain future.
Okay, so what I want to say is, while Canada has not had an official gold confiscation in the past, they also are not sitting on any gold reserves. And I think that makes a gold confiscation a real probability, certainly a possibility. So my answer to you is yes, because to do the older Canadian coins, if you cannot do the pre-33s, I am looking into finding some slabbed, because frankly, every country was on a gold and silver standard. So they have to have old gold coins. And that would be my preference. Absolutely. I feel that it'll give you an additional layer of protection, because we certainly saw what Canada did during the trucker strike. And even though that was perfectly legal, they, boom, cut you off from your bank accounts. If you donated $5, they cut that person off as well. So I do like Canada. My son-in-law is Canadian. I love going to VRIC, and I certainly know a lot of Canadian people and love them. But do I love the government? No, I don't. Do I trust them? That's up to you.